Fantastic. I think Glenn's going to get us started us off.
Yeah, no, thank you guys so much. And thank you for accommodating us. My name is Glenn Lee. I'm from Georgetown.
Hello, everyone. I'm Vittorio. I'm a sophomore at Georgetown.
Yeah, and today we'll be pitching Cellebrite as a long. Our price target is around $26, which represents a 45% upside to current levels. It's a blended 18% IRR.
All right, so Cellebrite. I'm going to get into the business overview. Cellebrite is a $4 billion market-leading digital forensics company. So what do? They provide software to extract, process, and manage data that is used by law enforcement or private enterprises in their investigations or in like a lawsuit-related circumstance. Their core business is about 88% of their revenue. It's growing about 23% CAGR. And it has a key product here, Insights, which bundles the extraction software as well as the data visualization and data processing software. And the software that they provide is deeply entrenched in their customer base worldwide, as well as both on the public and private side. And they mostly grow through selling additional licenses to their current logos with 124% net retention rate. Getting into the industry is rapidly expanding. It's about a $16 billion TAM right now, but it's growing about 50% a year. And the reason for that is that there's constant crime rates, but more and more digital evidence associated with each crime. This increased amount of evidence has made it so that there's increased reliance on the data management tools at Cellebrite. There's huge, inefficiencies in investigations right now. And law enforcement and other people who use Cellebrite really rely on the tools to get through their caseload. Also in this industry, there's a deeply embedded cat and mouse game here. So essentially, an Apple or Google constantly tries to update the encryption of their devices, and then a Cellebrite or other digital forensics player needs to update their R&D to crack into the new device despite these upgrades. And few players are able to play this fast-paced game, and the main competitor is Magnet, which is similar quality and price. We spoke to experts. We spoke to ex-digital forensics analysts at the FBI. We spoke to judges, and all of them really clearly said that there's a reliance on the Cellebrite tools, and it's a multi-vendor market where people use both Cellebrite and Magnet to cross-validate evidence, and it's backed up by a Magnet's growth and solid profitability. Despite the really high quality of this company, and this is despite the fact that it's positioned very well in its industry, 2025 has been a rough year for Cellebrite. So their longtime CEO stepped down, announced he was stepping down, and there was no clear, follow-up on who the new CEO would be disclosed to investors, which created a lot of uncertainty. On top of this, federal government issues. So the U.S. federal government is about 70% of their ARR. There were budget cuts, there were DOGE-related issues, and there were worries that this key growth component of the stock was going to slow down, and it quickly materialized in earnings. Cellebrite has been historically misunderstood because it's headquartered in Israel, not the U.S., and went public via SPAC in 2021, which has not always been the most successful companies. And so sell-side quickly downgraded this, and we spoke to buy-side investors. They also noted a lot of pessimism when they spoke about this name. And just to quickly show, the stock price has closely followed the growth story. It's down about 50% in August since all-time highs. The guidance was lowered less than expected, so right now it's trading about 35% down from the all-time high.
Yeah, so this brings us to our kind of three key theses. First, we believe that the federal issues that we mentioned before are overblown. Their key growth driver is going to set to reaccelerate in 2026. Secondly, we believe that they have a huge SaaS cloud opportunity ahead of them, and that's going to catalyze in the near term. And third, we believe that there's a high likelihood of a PE takeout at premium valuations over the next 3 years. Based on conservative estimations, we find a 22% delta to consensus by the end of 2027. And our base case, like we mentioned, we find 40% upside. Low interest and negative sentiment, we think leads to a great setup with an attractive reward skew. Going into our first thesis, we believe that their struggles in 2025 as federal ARR went flat were just idiosyncratic. Our research found that it was the first time in American history that both the DoD and DHS were funded under a full-year stopgap bill, which limits budget growth. We have conviction that this was sort of the main reason for the slowdown in ARR, as scraping the US contract database, we show a sudden drop of awards in Q4, which really coincides with when agencies start to allocate funds. We also validated this fact by speaking with a budget analyst who one mentioned that it was the worst case scenario in 2025, and two, it was the most gridlock he had ever seen in his 25-year career. So while investors in the street are, really worried about the break in the bull story, which was loudly touted by management, and are in wait and see mode to see what happens with the stock, we believe that there's a strong bull case that still exists, and this is not a fundamental demand issue. For instance, a sell-side analyst told us that they received 50% fewer calls from buy-side investors this year. And again, this just shows a lack of interest in the name. We find that next year already looks much more rosy. The One Big Beautiful Bill passed in July locks in billions of funding regardless of another stopgap bill. And through our research, we found that this should increase the DoD budget by around 14%. Once federal money comes back, we have the conviction that Cellebrite is extremely well positioned. So what we did was we surveyed 14 law enforcement users and found that a vast majority of them rated insights as highly critical. Follow-up conversations reveal that 60% of them use it daily or more, and just underscores how ingrained this is into their day-to-day job. Building on top of that, we went deeper and analyzed police documents we found from FOIA requests. And while it showed that departments spend about 5% of their budget on capital spending, on average, less than 0.1% of that goes to Cellebrite. So we believe that this is an easy tool to upgrade, and there are no sort of barriers to costs. Combined with the fact that we talked to an ex-FBI agent who stated that they have to, quote, find the budget for such tools, we think Cellebrite is in a strong position when money starts to come back. Finally, we believe the rest of the business continues to grow strongly, including Europe improving in Q2, steady revenue stream from state PD, which grows faster than federal, and 30 to 60% higher ASPs on upgrades from legacy platforms that we still believe have about 50% room to run. So in summary, while investors are really timid about the potential for Fed recovery and really haven't paid attention to Cellebrite, we believe that by late 2026, they can return to sort of their long-term growth trend and reduce churn. We broke down the key drivers to really hone in on what matters compared to sell side, which sort of hard code in their ARR growth, and it leads to mid double-digit delta with the street. Our second thesis is about their growing cloud opportunity in law enforcement, and we believe that the street is simply just not paying attention to it. Industry research shows about 15% of agencies use cloud, and with the majority of them on traditional platforms like USB sticks. We talked with international police officers who are not subject to the same sort of NDA agreements as FBI agents, and they really underscored the need to switch. And our own survey showed that among the 14 users, about 10 to 12 of them expected that in the next 12 months, departments are going to invest in cloud. At the same time, management told us they're accelerating their focus on grabbing sort of market share, and believe that this is an opportunity that makes sense from both the demand and the supply side. We also analyzed contracts. We sort of found, Googling around, and if departments want Guardian, they're sort of willing to pay. On average, on a regular police contract, Guardian and their cloud platform represents about 70% of its existing ARR, and this helps inform our revenue build, where we assume strong cross-sell that in 26 tapers into 27, but leads to about $25 million of incremental ARR. The second part of the cloud story, which we find super exciting, is Cellebrite's upcoming federal ramp authorization, which would allow them to sell to federal agencies. We talked to management, and they believe that it could double their TAM, and they have been engaging in sort of a long-term approval process. The timeline has sort of been unclear and shifted backwards over the last 3 quarters, which has led some investors to discount the growth opportunity. One sell-side analyst we called mentioned that he's not really interested in this issue right now, and another doesn't even include it as a near-term catalyst. However, we have conviction that approval is near. We pulled a comp set of around 11 companies from the FedRAMP database, which shows that Cellebrite should get their authorization in Q1, and IR confirmed that they have multiple agencies in their pipeline ready to sell to. Both FBI agents we talked to, specifically mentioned cloud as an agency need, unprompted, and just showed the sort of latent demand that we thought the street was missing. So unlike the 5 analysts who, mentioned FedRAMP but don't model out the impacts, we did sort of a back of the envelope calculation, giving us about $15 million of incremental ARR in 2027.
Getting into our third thesis, we believe there's a high likelihood in the medium term that Cellebrite's taken private. So first of all, the new management has deep transaction experience. So the new CEO that was confirmed to be CEO recently, he comes from Vista Equity Partners, where he was a partner. And the new CFO that was appointed in July comes from selling his last company. And we believe that it's not an accident that people with this specific skill set were chosen to be put on the management team. other key members of C-suite, like the CMO and the VP of IR, are also have deep transaction experience. There's also on the ownership side, Sun Corporation, the ex-holding company. It's a Japanese corporation. They own 43% of the outstanding shares of Cellebrite, but they're trading at a steep discount due to issues with their own management structure. And furthermore, Truend, the SPAC sponsor, has a $45 million upside if they reach $30 by August 2026, which we believe is possible through a take private. I know we're at time, so I'm just going to speed through things. The industry is dominated by PE. It's a very attractive industry for PE. We see Vista or Axon, the larger public corporation, as potential buyers. And we did a comparable companies valuation and present transactions to estimate what we believe the most likely premium is, and it was very attractive on an IRR basis. Glenn, do you want to maybe quickly go through this?
Yeah, just speeding through the kind of ARR valuation. We kind of started with, IR's, template. We built our own differentiated model, used non-consensus, non-sub revenue. We put a 39 times EBITDA multiple on it, which got us using a DCF to a $24 share price. In our scenario analysis, we just try to be as conservative as possible. We believe we have a very downside protected, high reward skew. And a lot of our differentiation kind of comes in the latter half of the investment time frame.
Yeah, and just quickly, one of the key risks here is that if they, an Apple updates their software, they might not be able to hack into it anymore. However, Cellebrite has vulnerabilities in the firmware, hardware, and software to kind of combat this. And we see three key catalysts like guiding higher on Fed ARR, cloud adoption rates increasing, as well as potential take private here. So yeah, thank you so much for listening to the pitch, and we're open to Q&A. Thank you.
Go ahead and fire away either from the Zoom judges or looks like we got portfolio manager extraordinaire with the hand raised. Thanks for dressing up, Derek.
I'm wearing a collared shirt. That's as far as it's gonna go. Great pitch, guys. Just a couple quick questions for you. It may have been on the slide, and I just didn't see it, but you glossed over the founder stepping down. What was the reasoning behind that?
Yeah, absolutely. Maybe I can go back to that. I had the opportunity to speak with a buy-side investor from Israel who knew the CEO personally. Essentially, when the Yossi Carmel had started the company, it was actually like a telecom business, and he wasn't really, perfectly like. The idea was that he would step down to take more time to spend with his family since he had been at the company for 25 years, and he wasn't as in tune with some of the new technological developments. But he had still been extremely successful, so this was a blow to the company.
Okay. All right. I don't want to hog the time. I'll let someone else.
All right.
Let's talk a little bit about why Thoma Bravo chose Magnet. And then Magnet, one of the things, if you read about them, they were shifting significantly into the private sector, which this company hasn't done. Why that's a concern as you look at this, because they're so mono-focused on an area that does have a great deal of regulatory, federal budgetary risk.
Yeah, absolutely. Glenn, do you have anything to add, or should I go for it?
Go first. Go for it.
All right, I'll just speak to this, and then maybe Glenn can as well. Let me move to that slide here. Oh, sorry. Yeah, so I think Magnet was a slightly smaller company when they took it private, so maybe that was a potential consideration. And also, it was US based. I don't think Yossi Carmel might have wanted to sell it at that time. And then the other consideration with regards to the private sector, Cellebrite is differentiated. 70% of the revenue is in U.S. federal government, but they're differentiated across EMEA and worldwide as well. So we don't see that customer concentration there. And I think there's just a little bit more steadier revenue streams possible there. I know they might have some more pricing power. I think maybe Glenn can speak to this if there's anything to add.
Yeah, I think it's actually a benefit that they do focus on the public side. I mean, it's growing faster than private. And even when I talk to IR, the state is a very steady sort of revenue stream. It's not impacted by federal grants. So the federal business, the growth there may be a little rocky, and that's led to investor concern. But I think it's great that they're more exposed to the public side. It's faster growing. It usually should be more recurring revenue. And the private side, the technology is being used less due to like privacy concerns. So we actually do think Cellebrite's positioning is probably better here.
I think Mark had a question. Hey, Mark.
Hey guys, nice presentation. I wondered if you might just walk me through a little bit of the other side of this trade. What do you think is the best part of the bear thesis right now? What's the thing that keeps you up at night if you're long this stock?
Yeah, so I think the main bear thesis obviously here is the slowdown in federal. I think a lot of the management sort of when we went back, 8 quarters, a lot of the growth they sort of talked about was going to be in federal. And then when you cut all the growth for this year, that sort of bull case goes away. So I would say that's what kind of keeps us up at night. But we really did the research on this driver, and we think that this is a temporary, 1 year issue. We think like the combination of that one big beautiful bill, they're positioning the public market, and some of the new technologies that they're developing really, sets them up for a great 26. And management has really kind of kitchen sink the guide, de-risk the guide, cut all the growth out of it. So I think the setup for next year looks really attractive.
I don't know what kind of research you guys have done around what existing technologies there are at the federal level. I don't know who their target customer is, but might somebody fairly assume that people like the FBI and the NSA have, forgive the slang here, a lot of really cool shit themselves?
I mean, I do think that, that's a possibility, but I mean, from all the calls we did, we talk with these FBI agents, we talk with judges that really interact with this technology. This is sort of the technology that's accepted, first of all, like legally, and also within the FBI, like this is sort of the main technology they use alongside Magnet. So, I do think it's possible that maybe the NSA has some secret technology that can crack all the phones. But at least from everything that's been disclosed and from our research, it's mainly been Cellebrite Magnet. And from here, we do think Cellebrite's gonna be the winner.
Great, thanks.
Thank you.
I don't know the space well, but sort of from the outside perspective, the discontinuity seems to be Palantir doesn't seem to be a direct competitor, but their business has been kind of going gangbusters the last 3 or 4 quarters. How do you sort of think through and rule out that the guidance cut was a end market issue and not a competitive threat, that they're losing market share to either, I don't know if it's Palantir or other competitor.
Yeah, so just
Go for
real
it.
quick, I think we don't think it's a sort of end market demand issue. I think what IR sort of or what we sort of found out was basically they churned 0 contracts. They ended up churning 1 contract, which they expect to renew next year. And the way Palantir is sort of positioned is sort of in the larger tech. The buy side investor we talked to mentioned that Palantir doesn't really play in the same, phone cracking. For them, it's too small of a TAM. So it's attractive for sort of a mid cap company like Cellebrite to really dominate that market. But Vito, if you have anything else to add.
Yeah, no, I was just going to say that their Cellebrite's really specifically good at what they do, which is cracking into the phones and then extracting and processing that data. And it's just too small of a market, it's too small of a contract for like a Palantir who's kind of going for bigger surveillance. Yeah.
I think that's the end of Q&A for now. Next team coming up is Team Bloomberg. Team Bluebird. Please come forward.